All right, so we're diving into real estate tax strategies today.
Okay.
You sent me a ton of research. It seems like a lot to know.
You can be.
But, I mean, maximizing your returns means knowing the tax game, right?
Absolutely.
So we're going to unearth some of these nuggets of wisdom
Okay.
to help people make the most of their investments.
That's good.
No one wants to leave money on the table,
Right.
especially not to the tax man.
No one likes paying more taxes than they have to.
Exactly.
What's interesting is that real estate is often seen as this like tax-advantaged investment.
Uh-huh.
But it seems like a lot of investors miss out on some of the nuances.
Okay, so let's unpack that a little.
Sure.
What makes real estate so tax advantaged?
Well, there are a lot of things.
Yeah.
Depreciation is a big one.
Yeah, we all know about depreciation, but how can we leverage it beyond just the basics?
Well, you're probably already deducting depreciation.
Right.
But have you looked into a cost segregation study?
Cost segregation study.
Yeah, it's like a forensic analysis of your property.
Okay.
And it can uncover hidden depreciation deductions,
Interesting.
especially if you've renovated a property.
So like finding extra deductions kind of tucked away in the fine print.
Kind of.
I like it.
Yeah.
We're not tax professionals or anything.
Of course.
But what are some other key deductions that,
Right.
real estate investors should know about?
Sure. So we're just highlighting what's in your research,
Of course.
not giving specific advice.
Of course.
But besides depreciation, the mortgage interest deduction is another big one,
Okay. Yeah.
especially those first few years when most of your payment is interest.
Right.
You can really write off a lot.
That makes a big difference.
Huge.
So this brings us to the classic question,
Uh-huh.
repairs versus improvements.
Okay.
Like if I'm fixing a leaky faucet, that's deductible, right?
Right. A simple repair like that is deductible right away.
Okay.
But a major upgrade is considered a capital improvement. And you have to, spread the deduction out.
So fixing that leaky faucet is like an immediate win,
Yeah.
but that fancy new shower is a longer game.
Exactly.
Okay.
Tax-wise, I mean.
Tax-wise, right?
Yeah.
So I saw something about travel deductions.
Uh-huh.
Can I write off my trip to Hawaii
Well,
for that real estate conference?
not any trip to Hawaii.
Okay.
The key is documentation.
Right.
The travel needs to be directly related to your business.
Okay.
You need records, to back it up.
So this meticulous record keeping,
Yeah.
that's crucial.
Super important.
Sensing a theme here.
Yeah.
What about the home office deduction?
Okay.
A lot of people work from home these days.
If you have a dedicated space that's used only for your business,
Mm-hmm.
then you might be able to deduct some of your rent or mortgage
Okay.
along with utilities and stuff.
And again,
Yeah.
documentation is key.
It's all about the documentation
Okay.
and following those IRS guidelines.
So it's not just what you can deduct.
Right.
It's how you time those deductions too, right?
Yes, exactly.
That's where tax deferral comes in.
Exactly. Tax
Yeah.
deferral is huge.
Okay.
Strategies like 1031 exchanges are like a secret weapon.
I've heard of those.
You basically hit pause on those capital gains taxes
Okay.
when you sell one property and reinvest in another.
So instead of paying taxes on that profit, I can just roll those gains over
You got it.
into a new property.
Exactly.
Okay, but is there a catch?
Well, you have to pay the piper eventually,
Right.
but you're giving your investment more time to grow.
Okay.
It's like a free loan from the government.
That's a good way to put it.
Yeah.
Okay, so what about opportunity zones?
Okay.
Are they as good as they sound?
Opportunity zones can be great,
Okay.
but you have to approach them strategically.
Right.
They encourage investment in distressed areas,
Okay.
and the tax benefits can be substantial.
Like what?
Well, you can defer capital gains,
Okay.
reduce your taxes, and potentially even have tax-free appreciation.
Tax-free appreciation. Now that's interesting.
Yeah,
Right.
but you have to hold the investment for a while.
Right.
You need to evaluate the specific opportunity zone
Yeah.
and the project you're investing in
Uh-huh.
to make sure it aligns with your goals.
Right. So opportunity zones,
Yeah.
it can be really powerful,
Definitely.
but you need to do your research.
Yes, and get some expert guidance.
Right. Like with everything else with taxes.
Pretty much.
Is there anything else we should know about deferring taxes?
Well, one more thing to look into is self-directed IRAs
Okay.
for real estate.
Okay.
You might be able to hold property in your retirement account
Interesting.
and potentially avoid some taxes that way.
Adding that to my research list.
Okay?
So we've talked about deductions and deferrals,
Mm-hmm.
but we also need to talk about the right business structure.
Absolutely. That's a crucial part of it.
Yeah.
It can impact your liability,
Yeah.
your taxes, even your ability to attract investors.
So it's not a one-size-fits-all.
Definitely not. We're talking LLCs, S-Corp, C-Corp, all that.
Okay, so how do we even begin to unravel all of that?
Let's start with LLCs.
Okay.
They're popular for a reason.
Okay.
They offer a good balance of liability protection and tax benefits.
Okay.
And they're generally what's called pass-through entities, meaning profits and losses
Yeah.
are reported on your personal tax return.
Okay.
Yeah.
Remind me why that's a good thing.
Okay, so with a C Corp,
Mm-hmm.
the corporation itself is taxed.
Okay.
And then any dividends you receive are taxed again.
On my personal return.
Yeah, so that's double taxation,
Right.
which can really hurt.
Yeah. No one wants that.
And pass-through entities like LLCs and S-Corp avoid that.
Okay, so avoiding double taxation.
Yeah.
That's the goal.
For sure.
So LLCs seem like a good choice.
They are, for many people.
What are the downsides, though?
Well, if you're planning on going public
Okay.
or seeking venture capital,
Yeah.
then a C Corp might be better.
So C Corp are more for the big leagues.
Yeah, pretty much.
What about S Corp?
Okay, so S Corp are another pass-through entity,
Okay.
and they have that same liability protection as LLCs,
Uh-huh.
but they can potentially save you on self-employment taxes.
Now you've got my attention.
Yeah.
How does that work?
So with an S Corp,
Okay.
you divide your income into salary and distributions,
Okay.
and you only pay self-employment taxes on the salary,
Interesting.
which can save you a lot of money.
Especially if your business is doing well.
Exactly.
Okay, so this is getting complicated.
It can be.
But choosing the right structure can make a big difference.
It's huge.
Huge.
It can be a game changer.
And we're just scratching the surface here.
Yeah, we are.
So,
You should always consult with a tax professional
of course.
or an attorney
Yeah.
to figure out the best structure for you.
Expert advice. That's the golden rule.
Always.
Even with the best advice, though,
Yeah.
mistakes can happen. What are some common pitfalls that real estate investors fall into?
One of the biggest is mixing personal and business expenses.
Okay.
Creates a big mess come tax time.
So separate bank accounts,
Yeah.
separate credit cards,
Exactly.
a complete separate.
Separation of church and state.
I like that.
Yeah.
It simplifies your bookkeeping
Yeah.
and protects you in case of an audit.
The IRS wants to see that clear documentation
Right.
that your expenses are legitimate.
Speaking of documentation,
Uh-oh.
I'm not the best at that.
Yeah, you need to be.
How much trouble am I in?
Meticulous record keeping is non-negotiable.
Okay.
Every income, every expense for every property
Got it.
needs to be documented.
So no dog ate my receipts excuses.
Probably not,
Okay.
but there are tons of tools and resources
Yeah.
to help you stay organized,
Okay.
like bookkeeping apps,
Hmm.
accounting software,
Uh-huh.
even professionals who can do it all for you.
Okay, so just find a system and stick with it. All right, I'm going to become a record-keeping ninja.
You got it.
What other mistakes are out there?
Another big one is overlooking state-specific tax laws.
Oh, right, because it's different everywhere.
Exactly what works in one state might not work in another.
Right.
Real estate is local.
Okay.
Make sure you know the rules.
Got it. So we can't just assume a one-size-fits-all approach.
Nope.
Especially with multi-state investing.
It adds a lot of complexity.
Yeah.
If you're dealing with properties in multiple states,
Okay.
you really need a tax professional
Right.
who specializes in that.
But who knows what they're doing?
Exactly.
This is more intricate than I thought.
It can be.
There's so many moving parts.
There are.
It seems overwhelming.
That's why professional guidance is so valuable.
So a qualified tax advisor, or CPA,
Yes.
can be like a secret weapon.
Definitely. They can help you navigate this whole thing.
Right.
And find those opportunities you might have missed.
So finding a trusted tax advisor, that's an investment that pays for itself.
More than pays for itself.
In the long run,
Yes,
they're
ma'am.
not just helping you reduce your tax bill.
Right.
They're helping you free up more money
Exactly.
to reinvest and grow your portfolio.
Exactly.
I like that.
Yeah.
Okay, we've covered a lot.
Well, yeah.
Deductions, deferrals, business structures, even expert advice.
Yeah.
I'm feeling more confident already
Yeah.
about tackling these real estate taxes.
It's a good feeling.
And we're just scratching the surface here.
Just the beginning.
So what's the next step for our listeners?
You need to take action.
Okay.
Schedule a meeting with a tax pro.
Yeah.
Review your deductions and how you're structured.
Uh-huh.
And start thinking strategically
Okay.
about the tax code.
So it's not just about understanding the rules, it's about applying them.
It's about applying them
Strategically.
strategically to maximize your returns.
To achieve those real estate dreams.
Yeah, imagine the possibilities when you combine smart investing with smart tax planning.
That's where it gets exciting.
For sure.
On that note, we'll wrap up part 1 of our deep dive.
Okay.
Stay tuned for part 2, where we'll continue uncovering more
That's
insights
good.
and actionable tips to help you take your real estate investing to the next level.
Awesome. Welcome back.
So before we move on,
Yeah.
I was thinking about how choosing the right business structure,
Yeah.
it's not just about minimizing taxes, it's
Right.
about protecting yourself too,
It
right?
is. You're absolutely right.
Asset protection,
Asset protection is huge.
especially as you're growing your portfolio.
Yeah. The more you have, the more you need to protect.
So what kind of liabilities
That's
could
good.
we be facing as real estate investors?
Think about it.
Yeah.
You could have a tenant who gets injured on your property
Oh, yeah.
and they sue you.
Okay.
Or maybe there's some kind of environmental issue
Right.
comes up.
Things happen.
Yeah, you got to be prepared.
So how do we protect ourselves?
One of the best ways is to hold your properties in a separate legal entity,
Okay.
like an LLC or a corporation.
Right. So this is where those LLCs
Yeah.
come in handy
Exactly.
with that liability protection.
You're limiting the liability to the assets
Yeah, okay.
held within that LLC.
So my personal assets are protected.
Right. It's like a firewall between your investments
Okay.
and your personal life.
That's a good analogy.
Yeah.
I'm guessing it's not just as simple as setting up an LLC, though.
No, you're right.
Right.
Asset protection is a multifaceted approach.
Okay.
It's not just the legal structure.
Okay.
You need insurance too.
Right.
And you need to operate your business to
Yeah.
minimize risk.
So it's like a multi-layered defense strategy.
Exactly.
Okay. So legal structure,
Yep.
insurance,
Yep.
and smart operational procedures.
Exactly.
And it's an ongoing thing too, right?
You need to review your asset protection plan
Right.
regularly.
As your portfolio changes.
Yeah, and grows.
Speaking of growing portfolios,
Yep.
we need capital to fund these investments.
Well, you do.
And I'm assuming there's a tax angle to financing too.
There is absolutely.
Okay, so how you finance your properties
Right.
affects your tax liability.
Big time. We talked about the mortgage interest deduction.
Right.
That could be a big one.
So traditional mortgages are good
Yeah, they're a solid option.
from a tax perspective.
Yeah, for sure.
What else should we be looking at?
Well, there's seller financing,
Seller financing.
where the seller acts as the lender.
Okay.
It can be good for both sides.
How so?
Well, you might get better terms,
Okay.
and the seller could spread out their capital gains
Okay.
over time.
So it's a win-win.
It can be, but you need a clear agreement
Right.
that outlines everything.
The terms, the tax implications,
All of it.
transparency is key.
Very important.
What other creative strategies are out there?
Have you considered lease options?
Lease options.
Yeah, they give you the right to lease a property
Okay.
with the option to buy it later. It's a good way to get your foot in the door.
Yeah. If you're not ready to buy yet.
Right.
I'm guessing the tax stuff with lease options can be a little tricky.
It can be. It depends on the specifics of the lease option, how
Yeah.
it's structured, and how the payments are treated.
Right.
So again, professional guidance is key here.
I'm sensing a theme.
Yeah, it's all about getting the right advice.
Okay. Are there any other financing gems we should know about?
Well, there are some more specialized options,
Okay.
like hard money loans.
Hard money loans.
Those are usually short-term loans,
Okay.
used for things like fix and flip projects.
Okay, hard money loans sound intense.
They can be.
Are they more expensive?
They usually are. Hard money lenders charge higher interest.
Because they're taking on more risk?
Exactly.
Yeah.
But even though the rates are higher,
Yeah.
that interest is usually still deductible.
So higher costs up front,
Yeah,
but potential tax benefits later.
exactly. It's a trade-off.
What about private loans?
Private loans can be a good option, especially if you have a good relationship with the lender
Okay.
and you can get favorable terms.
Trust and transparency are important there.
They're essential. You need a solid legal agreement
Okay.
that outlines everything,
Terms, interest rates, repayment schedule,
all of it,
and the tax implications, of course.
of course.
So there's a whole spectrum of financing options.
There is. It's not one size fits all.
Right.
And by understanding the tax implications,
Yeah.
you can make better decisions.
So we've gone from asset protection
Uh-huh.
to financing options.
Yeah, it's all connected.
It all fits together.
It does.
This is a lot of information.
It is. We're just scratching the surface here.
And the more you learn,
Yeah,
the better equipped you are to make smart decisions.
exactly. Knowledge is power.
Okay, so before we move on
Yeah.
to the final part,
Okay.
we've talked about expert advice
Uh-huh.
throughout this whole thing.
Right.
When does it become absolutely crucial?
I think one area where it's paramount
Mhm.
is navigating the tax laws.
Tax laws, that's a whole other beast.
It can be.
Are we talking federal, state, or both?
Both. Actually, tax laws at every level are always changing.
Always changing.
New legislation, court rulings, IRS interpretations.
It sounds like a minefield.
It can feel that way.
So what worked last year might not work this year.
Exactly. That's why staying on top of it is so important.
So how do we stay ahead of it all?
Well, you could become a tax expert yourself.
I don't think I have time for that.
Yeah, for most people, it's better to rely on the experts.
So our tax advisors,
They're the key.
right, what kind of guidance can they give us?
They can help you understand how the new laws affect you.
Okay.
They can find those tax-saving opportunities
Yeah.
that you might have missed,
Okay.
and they can make sure you're in compliance.
So having a tax advisor
Huh.
is like having a secret weapon,
It can feel that way.
but it's still up to us
Yeah,
to make the final decisions, right?
right. A tax advisor can give you advice
Mhm.
and recommendations.
But we're the ones in the driver's seat.
You're the CEO of your investments.
So back to that mindset of being proactive,
Absolutely.
informed,
Yep.
and adaptable.
You got it.
Okay, so we've covered financing options,
Yeah.
tax laws.
Tax laws.
It's all about knowledge.
Knowledge is power in this business.
It really is, and that knowledge,
Yeah,
it helps you make smart decisions,
it does.
mitigate risks,
For sure.
and maximize your returns.
That's the goal.
This has been really valuable.
I'm glad you think so.
Before we wrap up this part,
Yeah.
any final thoughts?
Real estate investing isn't just about the properties.
Right.
It's about building a foundation of knowledge
Okay.
and getting the right team.
So it's about leveraging the expertise of others.
Exactly. You don't have to do it all alone.
That's a good point.
Yeah.
Okay, we're going to take a quick break,
Okay, sounds good.
but we'll be back soon
Looking forward to it.
for the final part
Great.
where we'll tie everything together. We're back for the final part
Okay.
of our deep dive
Sounds good.
into real estate tax strategies.
Yeah, we've covered a lot.
We have deductions, deferrals,
Uh-huh.
asset protection, financing, expert advice.
It's a lot.
It's like we're building a real estate investing toolkit.
I like that analogy.
So now that we've laid the groundwork,
Okay.
are there any other key things
Yeah.
that investors need to keep in mind?
One thing that's often overlooked
Okay.
is proactive tax planning.
Proactive tax planning.
Yeah, a lot of people wait till tax season,
Right.
but that's not the best way.
So we need to be anticipating our
Yeah.
tax situation
Not proactive.
instead of reacting to it.
Exactly.
Okay, so what does that look like?
Proactive tax planning.
Yeah.
It's about making decisions throughout the year
Okay.
with taxes in mind.
Okay.
Every investment decision you make,
Okay.
every financing move, operational choice,
Yeah.
it all has tax implications.
It's not just about crunching numbers in April.
Right.
It's about thinking about it all year round.
All the time.
Okay, so give me an example.
Okay, so let's say you're thinking about buying a property.
Mm-hmm.
You need to think about the purchase price,
Oh.
the financing terms,
Right.
how much rent you'll get,
Yeah.
and how it will all impact your taxes.
So it's about being mindful
Yeah,
and strategic.
exactly.
Okay.
Thinking a few steps ahead.
Does this make working with a tax professional
It does.
more important?
Absolutely. They
Yeah.
are your strategic partner,
Okay.
helping you anticipate those challenges
Right.
and find opportunities.
That we might miss on our own.
Exactly.
Okay, so they're like our co-pilot,
Yeah,
helping us navigate this complex world of taxes.
that's a good way to put it.
But we're still the ones
Right.
making the final decisions.
Right. They can give you advice,
Mm-hmm.
but you're the one in control.
So we need to be proactive,
Absolutely informed.
adaptable.
You got it.
Okay, so we've learned about deductions, deferrals, business structures,
Uh-huh.
asset protection, financing,
It's a lot.
proactive tax planning.
We covered it all.
It's a lot to process,
It is.
but I think we've given our listeners a good start
I think so.
to building their real estate empires.
Yeah. Take this knowledge
Right.
and apply it.
To their own situation.
Exactly.
So it's about taking action,
Just action is key.
turning this knowledge into results.
Imagine the possibilities.
When you combine your entrepreneurial spirit,
Yeah.
your investment savvy,
Uh-huh.
and a smart approach to taxes,
That's the formula.
that's the formula for success.
It is.
And on that note,
Okay.
we're going to wrap up
Sounds good.
this deep dive
Yeah.
into real estate tax strategies.
It's been fun.
It has. Thanks for joining me.
Of course. Anytime.
We hope you found this valuable
I hope so.
and that you're feeling empowered
Yeah.
to take your investing to the next level.
That's what we want.
Knowledge is power.
It is.
And in real estate, that power can mean big financial rewards.
Bigger rewards.
So keep learning,
Keep learning.
Keep growing.
And keep pushing the boundaries.
Don't be afraid to think outside the box.
Until next time,
Okay.
happy investing, everyone.
Happy investing.